It's a very green screen with key indices near the day's high today. Gainers far outnumber the losers. Metals, pharma as well as autos lead the charge, while healthcare and FMCG are the relative underperformers and mid-caps outperform today.
Can Homes slides after its CEO resigns. The move comes as a surprise given his clarification to CNBC-TV18 in May that he would serve his full term until September of 2024. Analysts see the uncertainty as an overhang.
Reserve Bank of India sources tell CNBC-TV18 that there is no move to allow non-banks to issue credit cards at present. This is a dampener for the non-banks that presently, remember, distribute credit cards for the banks.
Natco Pharma gains on approval to launch a 2,000 crore insecticide. Shilpa Medicare gets a new drug boost. Bombay Dyeing has a rights issue tailwind, and Advanced Enzymes perks up on share sale by promoters to a private fund.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. So let's begin with the market then. And yes, green on the screen, and it's looking quite pretty with Nifty 50 really inching towards even that 18,000 mark and at the moment closer to the high point of the day with 1.5% gain. When it comes to the bank Nifty, of course, that is the one, the financials and the banking heavyweights really leading the charge and outperforming the key indices with 1.7% gains at the moment, and mid caps far outperform the key indices, and there is a fair bit of broad market participation. 2% gain on the mid cap universe, and advanced decline ratio more than double the stocks in the advancing side compared to the declines today. So all in all, a good day of trade today, and Apollo Hospitals is on my radar, 4.4% up, along with some of the other from the healthcare space like Cipla doing extremely well as well. And it is an across the board participation that we are seeing in the market euphoria. Pavitra.
Oh, absolutely. Look at the kind of moves that we're getting. And you know, normally ahead of this kind of an event, the Fed meet is starting today. You see some nervousness in markets. This time there seems to be none. Whether you look at our own markets, the rest of Asia has also moved higher. So some of those markets will come up for you. Hang Seng is 250 points in the green right now. Taiwan is also moving higher. But I mean, of course, we're still doing a lot better than these markets, pretty much the way the trend has been shaping up. If you take a look at the sectors, all of them in the green today, but a lot of strength coming through from the metals pack, from the pharma space, as well as the real estate and auto space. So some of those stocks will be up on your screen. These are the ones which are faring the best. So you have something like a Hero, Tata, Eicher, all of these doing well, and some of the pharma stocks as well. In fact, we've seen this week the IT stocks are also doing quite well, and today it is mid-cap IT which is really shining. So something like an Emphasis is up over 3% right now. So that's what's going on as far as the market action is concerned. But let's talk about some individual stocks which are moving around. Can Homes is the one which we're tracking. It's lower by around 3%. This after the, kind of 8% cut that we saw yesterday. This is on news that Girish Kousgi has resigned as MD and CEO of the company. Abhishek is here to tell us more about that. Abhishek.
Well, as you mentioned, Mr. Girish Kousgi has resigned as MD and CEO of Can Homes on account of personal reasons. So he will perform his duties only till the date that will be referred by the Canara Bank in terms of, there is no definitive timeline as of now, but eventually he'll be resigning from the post. One alert, his term was to end up to September 2024. So there is resignation which has come in earlier, and his term is ending sooner than expectations. So on 6th May, we had Canara Bank management on air who said that there are corporate governance issues that they have seen in Can Homes, and there were accounts which are identified as fraud. However, the amount at that point of time was mentioned as less than 4 crores. So Jefferies has written a note on Can Homes. They have a buy rating with a target price of 730 per share. They say that Mr. Kousgi's resignation is a setback, and there is uncertainty surrounding the fact that, how will the management change get perceived by the investors. So this has come in as a negative surprise to investors. Back to you.
All right. Thanks so much, Abhishek, for getting us all those details. Of course, management rejig and changes at the top brass and uncertainty for the shareholders. But Can Homes, if we see, is down more than 3% right now. The initial re-jerk reaction was bought into $25 above from that, but still trading lower in an otherwise very good day of market. Let's stay with the financial services space and shift focus to the NBFC pocket now. And sources tell CNBC-TV18 that the Reserve Bank of India is currently not looking at allowing the NBFCs to issue credit cards. Lata Venkatesh gets us all those important details. Lata.
Well, the fact of the matter is that the Reserve Bank is not considering this at the moment. Sources close to the central bank told us, and I'm quoting verbatim, this issue is not on the table right now. Now, it becomes important to clarify this because there has been market speculation that very strong NBFCs like Bajaj Finance may be allowed to issue their own credit cards. You know, at the moment, they are allowed to distribute credit cards of other banks like Bajaj Finance distributes RBL and DBS, but they distribute that only into the top metros, whereas Bajaj Finance lends in a lot of tier 2, tier 3, tier 4 companies. So if they're allowed to issue credit cards, they can really mine that depth. But it is not on the table. Now, the reason why the speculation in the minds of investors came in was because Reserve Bank issued a fresh set of master rules on credit cards on April 21st. And there in that was a sentence, without the prior approval of the Reserve Bank, NBFCs shall not issue debit cards, credit cards, charge cards, either physically or virtually. Now, this gave the impression that with the prior approval it is possible. However, when we asked these sources, they said it is a complete reiteration, a cut-paste of a rule that already existed, and nothing has changed, nothing fresh is on the table.
All right, Lata, thanks a lot for bringing us all of the details on this story. But with that, let's move on and bring you some important corporate commentary as well. This comes in from M&M's MD and CEO Anish Shah. In an exclusive conversation with my colleague Parikshit, he said the demand seems to be product-driven, but will grow in conjunction with the company's expansion plans. He also added that their primary challenge continues to be the inability to meet customer demand rapidly. Here are some of those excerpts.
Multiple projects that we will bid for, as we have been bidding. Sustain actually is a business today which did both EPC as well as development. We've done more than 5 gigawatt, and the plan is to really take this at a different level. We've typically been bidding on a large number of projects, and that will continue. At this stage, the step we've taken with the EV Co being separate is really the primary step. There are no plans in the short or medium term to look at any further separations as such. For us, capacity creation is not as much about the plant. Our Chakan plant has the ability to expand and be able to put in more lines. It's about getting the entire supply base ready to be able to generate a lot more capacity for us. We're not looking at a 20-30% capacity increase. We're looking at far greater than that. Expanding capacity is not an issue with our existing plants. Expanding capacity has to be done in conjunction with all the suppliers. They have got to put in extra lines, they've got to put in investments, get the machining tools in. So once all of that happens, that allows us to take capacity to the next level. We have huge demand, as you know, across all our models, and therefore our capacity is fully utilized, and we are expanding capacity. We may have some of that in the next few months, but then more in a few months beyond that. At this stage, if you look at the XUV700, we've been getting 10 to 11,000 bookings for the last year. So it's one that is really driven by the product. Similar with the Scorpio N, we had, as you know, 1 lakh bookings in the first 30 minutes, and there continues to be very high demand for that, which again is driven by the product. So is it with the Thar, with the XUV300. So we don't see this demand going down. In fact, as we put in more capacity, we would likely see it going up because we can serve the capacity, or we can serve the demand faster. Today, the challenge we have, and the one thing that we are unhappy about, is we can't meet customer demand as quickly as we'd like to. That's what we need to address.
All right, so that's the word coming in from Mahindra and Mahindra. On that note, we'll slip into a short breather on Business Lunch. But remember, when we return, the all-important 2-day FOMC meet begins today. More on that after this very short break.
Welcome back. You're still tuned into Business Lunch on CNBC-TV18, and the big global market cue that we're tracking, the two-day FOMC meeting begins later today. Now, the central bank is widely expected to raise interest rates by another 75 basis points. But remember, after the August CPI came in a tad above expectations last week, some economists are now also forecasting that we could see a 100 basis points hike. I think it's around 16%. Now, remember, Fed Chairman Jerome Powell in his Jackson Hole speech had also pledged that the central bank will use all of its tools forcefully to attack inflation. He also said that higher interest rates will likely persist for some time. So on this very topic, we've gotten a whole host of opinion from former Fed Chair Roger Ferguson, former PIMCO Chief Paul McCulley, as well as JP Morgan's James Sullivan. So let's listen into that.
Fed needs to continue to execute the strategy they've laid out. I think 75 basis points is the more prudent move this time. And I think they have to signal in their, what's called their SEP, the Summary of Economic Projections, and also, very importantly, what Jay Powell has said in the press conference, that they're going to stay on that path. They cannot be dissuaded. And that is because I think inflation is the clear and present danger here. And I think they have to be prepared, and we have to be prepared for what Chair Powell called, which is some pain, i.e. hopefully a short and shallow recession. But getting inflation under control is job one. And moving methodically up this time 75 basis points and indicating more to come, I think is a better approach.
What's the terminal rate going to be, and how long are they going to stay there? And the marketplace has moved a lot since Jackson Hole and also since the CPI data. So you have a lot of nastiness already priced into the marketplace. And the issue really going forward is at what point will we see the Fed say that they're going to slow this down? What point are they going to start talking about the notion that we're going to reach a point and stay there for a while? And then the issue for the equity market is going to be whether or not it's going to be a softish landing or a recession.
So we do think the strength of the domestic economy is justifiably driving sector-level outperformance, particularly if the forecast is more of a global economic slowdown. At JP Morgan, we're forecasting the Fed rate to hit 4.5% next year, which is in line with the most recent Fed dots. We're expecting 75 basis points this week. One of the things that we're now starting to see developed market central banks respond to, and we think India will be at pace with this, with a 50 basis point increase rather than the 35 basis point rate increase that we had penciled in India, is the fact that the Fed aggressiveness is leading to very significant dollar strength globally.
All right, so all eyes would be on the FOMC meeting, but there are more impacts on other asset classes of where the Fed really moves. So let's talk about the crypto world. So cryptocurrencies, namely Bitcoin and Ether, hit a 3-month low overnight amidst the expectations of higher interest rates. Louis Oganis, who's the head of currencies, commodities and emerging markets at JP Morgan, he says that the environment for such assets is only going to get tougher as the Fed continues on its rate hike trajectory. Let's listen into his views.
The Fed continues to tighten. It looks like, some of these, risky assets that relied on cheap money for so long are probably going to continue to suffer. So I don't think that this spells the death of cryptocurrencies. I'm sure that at some point there's going to be, some, that new asset class, is going to find its footing and its demand. Remember that, cryptocurrencies is still largely a bet on the future. No one knows exactly what is going to be the ultimate source of demand for these cryptocurrencies. But I would say that in the coming quarters, while the Fed is still acting tightening, I think that it's going to be a very tough environment for cryptocurrencies because, again, they were favored as an investment destination because of easy money, cheap money. That is no longer the case.
All right, that is the word from JP Morgan on cryptocurrency, saying that the environment is going to remain tough. We've seen a near 53% drop in Bitcoin in the past 6 months. But with that, let's move on and also bring you some important opinion from Hiren Ved, CEO, Director and CIO at Alchemy Capital Management. And he says that the market is heading to much higher levels and also gives us some of his top earnings as well as sectoral calls. Listen in.
We continue to remain very, very constructive on the market. We've thrown everything at this market, right, for the last 12 months. right from rising rates to inflation, to the Ukraine war, to the energy crisis in Europe. And despite that, if the market's just shy of its all-time highs, it's telling you something, that this is more structural. India is in a great position, despite all the challenges that we are seeing around the world. And I have no doubt that our markets structurally are heading to much higher levels than where they are today. By the second half of the year, you will probably see upgrades starting to happen, right? And I think, autos, banks and financials, that's where the earnings growth, capital goods, that's where the earnings growth is likely to come through. So I personally feel that consensus is too bearish on earnings.
All right, so those are the market views coming in, but we'll slip into a short breather on Business Lunch. And on the other side, remember, after a 3-decade-long intermission, cinemas have returned to Kashmir. We'll tell you more about that and the momentous occasion when we return. Welcome back. You're watching Business Lunch, and take a look at the market, and the momentum really carries on. 17,900 conquered again by Nifty 50, sitting with the gains of almost 290 points at the moment. When it comes to Bank Nifty, that is now up almost 1.8%, and some of the financials, especially Kotak Mahindra Bank, has really taken a lead in the last few minutes of trade. Apart from that, Apollo Hospitals had been the top gainer amongst the heavyweights, not so much in terms of its weightage, but 5.8% high on that particular counter. But take a look at Infosys also, a very, very big contributor, but has seen some shave off from the top at the moment. Keep an eye out on the markets, and moving on to an important story of the day. Fintech startup Bharat Pay is in focus today, and this is after the company appointed 2 new independent directors on the board and also appointed a new CFO. And my colleague Ritu Singh spoke to Bharat Pay's chairman Rajneesh Kumar on the company's growth and profitability targets, IPO plans and more. Listen in to some excerpts from that conversation.
There should be a consistent record of a few quarters as far as the growth and profit is concerned, so that it gives confidence to the investors that the company has a plan, it is working to a plan, and there is a potential for growth and profit both. So that confidence, at whatever stage we feel that the company can confidently go and tell the investing public that, look, this is how we are performing and what our plans are, and we will be able to achieve those plans. We would like to go to the market with that confidence. 18 to 24 months is the time period by which we can aim to list Bharat Pay. Right now, as I said, that there is a little bit of a strategic shift. So growth is under focus, no doubt about it, but the focus is more on earning the profits and improving the bottom line. And again, in last several months, the company has worked on its strategy to make it profitable. The cash burn, which used to be $11 million per month, it is now down to little above $2 million. So which is a big improvement. And within next 2 months, or at best in 3 months, we will be EBITDA positive. There is absolutely no doubt that Bharat Pay will be profitable, and Bharat Pay will be pursuing high growth opportunities which are available in the Indian market.
All right, that is the word coming in from the Bharat Pay management, saying that the main focus right now is on turning profitable and sort of working on that. And after that, they could look to list in the next 18 to 24 months. But with that, let's move on and also bring you some important national news. In what could be a revamp of sorts for the Congress, the party has begun a month-long process to select the next party president. Chorus is now growing louder for Rahul Gandhi's elevation to the top post, but many other leaders like Shashi Tharoor as well as Rajasthan Chief Minister Ashok Gehlot have also come forward to contest the elections. Now, the party will come out with its list of delegates today, and polling for the top post will take place on the 17th of October. After that, the results will be announced on October 19th. So, Nisha, that's something important to track from a political standpoint.
Oh, definitely. We want a stronger opposition as well for the democracy to really function. But to another very important development and to normalcy when we talk about Kashmir, well, cinema halls return to Jammu and Kashmir after 3 long decades. It's a historic day for the Union Territory as cinema halls had remained closed since the early 1990s, remember, due to unfavorable conditions of militancy and unrest. CNN News 18's Mufti Isla gets us the latest on ground from Srinagar.
It's after a long time that a multiplex has been constructed in the valley and which is in fact beaming a film Lal Singh Chadha today for the first time.
Ground report there, and a very momentous occasion when it comes to normalcy coming back to Kashmir, Pavitra, because, you know, for 2 years we didn't have theatres and we were really looking forward to it, and people of Kashmir didn't have it for 3 decades. So
it's hard to imagine, right? I mean, it just felt like such a change when you couldn't go for those 2 years itself, and 3 decades seems unimaginable.
That's right. People of our nation need normalcy in all the states then.
Well, definitely good news coming in that the theatres are now open once again in Kashmir. And on that very positive note, we're going to wind down. By the way, there's no stopping the markets here as well. It's 270 points higher on the Nifty, 1.5% in the green for the market. So thanks a lot for tuning into Business Lunch. Mid-Cap Radar comes up next.